XAI is behind Anthropic and even OpenAI in certain areas of the AI coding space, particularly coding itself and then also function calling. The whole rage is about clause and about this function calling and basically executing knowledge work automatically. And the question for us investors, Tesla investors and Nvidia investors, is how do we feel about this? Like, what is this a problem? If so, why? And if it's not, why is this even an issue? It feels bad that particularly Anthropic is making all this money. There's a bit of a fear that they could run away with because we're very early stages now with AI. And if you can make a couple of $1 billion here and there and reinvest them in compute and model training, then you can run away. So there's a risk on that front. So we want to discuss that, in particular, how it pertains to XAI, Grok, and also Tesla. This is not in our podcast. It's March 22nd, 2026. This is Krim Delco. For the year, we're down 17.7%. The market's down 5.5%. We're underperforming by 12.2%. A couple of words about the drawdown. Unfortunately, we're in one of those times again when we're losing money. And I think for long-term listeners of the Not Your Own podcast, we've been there before. We've had much worse times than this, but still, it's very concerning. So in times like this, it's always good to understand what is going on. Just put the facts on the table and then sort it out, like understand why things are happening the way they're happening. So the facts are that there's a drawdown in the market because of the Iran war, and there's a risk of escalating Iran war. And there's a fact that oil is going through the roof because of the escalation of the Iran war, and higher oil prices are attacks on the economy, they're attacks on people, they're attacks on risk appetite. And no matter how we feel about the future of Tesla, SpaceX, and X, I think a certain appetite of risk is necessary outside of the Musk economy because you can't just build these types of assets on your own. So risk appetite's coming down, concerns are going up. I think there's a feeling also that we're rudderless. In other words, our White House leadership doesn't really reflect even its own incentives, let alone the incentives of the people that voted for Trump and his people. So there's a bit of a disillusion. We are incredibly disappointed when it comes to domestic politics. We can't get the SAFE Act done. We have corruption in California and Minnesota. We have mayors in LA, Chicago, and New York that one can easily call Bolshevik at this point. So there's quite a bit of tension when it comes to domestic politics, and nothing is being done. Even worse, we're wasting all this resources and all the goodwill. That's very important. The goodwill with the people in America, we're wasting them on this Iran war that has no purpose, is not winnable, and only serves a very narrow set of interests within the US and Israel, and that's not really what Trump was elected for. Trump was elected for America first, and this is not America first. So those are the concerns. That's where the drawdown comes down. Whether this will continue or not, I think it's anybody's guess. We expect it will continue. For us at Orange Capital Partners, it's a lot more important to understand the fundamentals of our stocks. And I think the fundamentals of Tesla and Nvidia are different. We have, let's start with the easier one, and that's Tesla. I think with Tesla, we have the Cybercab launch, we have the Robotaxi launch, we have unsupervised FSD. There are pushbacks there from the regulator. There's stalling. There is the expected regulatory capture that companies like Waymo and also Uber and others are trying to slow down the development of Robotaxi. All of these things are expected. We still think that obviously Robotaxi is a massive catalyst because transportation as a service is a very big market, and Tesla can be a leader in this market. They don't need to have 100% market share. Right now, it's difficult to see how they're not going to get 100% market share because they're by far the best cost provider and also value provider. On the value side, you could argue, let's say Waymo has value too, but if you take the whole system in place, so meaning general, not geofenced, not human or managed, then of course Tesla is by far better positioned, lower cost provider, particularly when Cybercab launches. So we're very, we're very enthusiastic about that market, and that's of course why we think that Tesla as a stock is undervalued. Then we have the opportunity of unsupervised FSD, which is another big step change in the value that Tesla as a company provides to its customers. And that's just what is tangible this year. Of course, when we look further out, we see opportunity in the sort of real world robotics space. We see opportunity in applying FSD to Optimus and also digital Optimus, a new business line that Musk mentioned that will take a few years to come into fruition. But the things that are right now, again, is Cybercab, Robotaxi network, Cybercab network, unsupervised FSD, and of course also the energy and megapack business that are very interesting. I think in the 2 to 5 year range, we have space AI, we have massive compute, we have removal of constraints such as power and space, which will enable a whole different step change in intelligence that then will be translated into real world AI, and that's a big opportunity for wealth creation. So as far as Tesla is concerned, we're okay with the company, and we see this drawdown as a macro event with some risk of delays of Robotaxi, Cybercab, and unsupervised FSD. There is a risk of delays. We have to acknowledge that. And that will cost us certainly 10-20% in the stock, but that's of course only temporary. As far as Nvidia is concerned, I think the jury is a little bit more open, because here's the thing: the company is guiding phenomenal numbers, delivering phenomenal numbers, so the fundamentals of the company are phenomenal. The stock is very, very cheap, and now you have to ask yourself, is this a value trap? What's going on here? Is the competition from ASICs? Is the competition from maybe even space AI? Is there a real risk for Nvidia to be disrupted? We don't see it because we believe that at least until Musk launches space AI at scale, the constraints that Nvidia is very good at circumventing, which is space, tokens per watt, tokens per dollar, will still be very important, and therefore people will be desperate to get Nvidia products and services, and therefore Nvidia can continue to grow the way they're growing right now. So this is the way we see but nevertheless, the stock is not reflecting that potential. And I think we need to be honest, it's a very liquid stock, very well followed stock. There is definitely something that somebody might know that we don't know. So this is not, with Tesla, I think people are so emotional about the stock, it's very well possible that people underestimate the potential. Now with Nvidia, we still think the risk is to the upside here. People have been underestimating Nvidia for the last 20 years and at their own peril, and I think this will continue. And the reason is that other than Musk's Terafab idea, there's no real competitive risk that Nvidia is facing. This is our statement. I know there's a lot of pushback here, what about the TPUs of Google? What about this? What about that? These are all adjacent products to the Nvidia freight train that is still moving the AI community ahead. So we're very comfortable with Nvidia. We're incredibly comfortable with Tesla. And now the question is, let's now talk about the actual topic of this episode, and that is, now XAI has fallen back. And Anthropic particularly has surprised the community with its successful Claude Code product. Codex, the OpenAI competitor, is catching up. Gemini, I think there's more PR than actual traction there. Google has a big position in the academic and media community, and therefore people are pushing this. But I would say Google is also behind, and then X and Meta are way behind. The Chinese are open source, they're catching up, they're good for the value that they provide, but of course nobody trusts them, so you can't really take them as competitors. So let me dissect this into a couple of things. First, I want to say the fact that X is even in the conversation is already a surprise, right? X started 3 years ago. I remember we were asked to invest and we declined because we were always of the opinion that this is not a game that Musk's very good at. Musk is not good at, let's call it legacy AI. He's good at real world AI, and that's a very different problem. Legacy AI, that is large language models, reinforcement learning, tweaking models, finding more efficient algorithms, delivering value through function calling, code editors, code execution. That's software for software's sake. And it's working really well for the companies like OpenAI and Anthropic, which are native software companies. Musk is not a native software person. He's very good at using software to solve real world problems, not software problems. Therefore, we were always kind of expecting him to fall behind. The fact that Grok caught up so fast with ChatGPT and everybody else on the large language model side was a surprise, and I think that was partly driven by the amazing compute that is available to Musk and his people, but also, of course, the execution. Now, he said it several times. We need to rebuild X. X was not built properly. He's hired people from Cursor, people from Mistral. I think those are people that are either afraid that they're going to be, made obsolete by Anthropic and others, or they just fell behind themselves. The question is, okay, what exactly is the race now, and what are we racing for? And I think the race at the big picture is executing work, and at an even bigger picture, it is real-world intelligence. So solving real-world problems, which is, definition of intelligence by John McCarthy is pursuing goals, or the computational part of pursuing goals. Now, these goals are a lot broader than just executing code or, dealing with your home electronic system and making sure that the water sprinklers are on when they should be on and things like that. We're talking about goal-driven AI, goal-driven being an AI that acts, like, let's say, Tesla FSD is a goal-driven AI. The goal is to get you from A to B, and then it acts according to what the world throws at it, sort of. Versus these function calling AIs, these claws or harnesses or whatever you want to call them, they're a lot more deterministic. They're a lot more IT kind of softwares where, okay, I need to execute this, payroll file or HR file or those types of things. So there's not a lot of reacting to an uncertain environment type of stuff. Nevertheless, of course, these things are very useful, and I think the race right now is in getting good at that. And I think X is behind that, and I don't see necessarily how they can catch up. Now, what Musk has said is that he's going to build Digital Optimus, and Digital Optimus, the goal of Digital Optimus is to be real-world AI solving real-world problems with software, and then eventually also with robots. That's the end goal. And I think on that front, Musk will overtake everybody else, and Musk will also overtake everybody else because he's going to have the compute and the chips. So that's the way we see it. We see that in the short run, we're going to fall behind, but as Tesla investors, we're incredibly happy that we're not running on this race. We're running on a very different race, and this is the key. The race that we're running on is that you don't specify, you don't give your agent access to your files and then APIs, and then it executes code. You tell the agent, I want a clean apartment, and then it does that with whatever tools necessary, Optimus and home electronic system, and whatever is necessary to clean your apartment. So that's sort of the big picture here. I think in the short run, we don't need to worry necessarily about cloud code or things like that, because again, our catalysts are in transportation as a service, semis, or self-driving semis, things like that. There's no Anthropic competing with that. I think in the long run, we think Tesla will overtake all these niche products and become a general intelligence solution for real world problems with the appropriate amount of chips and compute, which is what Musk is investing in. So that's the long run. So both in the short run and the long run, we have enough assets and enough wealth creation opportunities to not worry too much about Anthropic. Where we worry about, particularly Anthropic, is of course the political side. And that is something that we can't really control. And that's not necessarily an investment problem. But of course, you don't want a company like Anthropic with its woke mindset to garner billions of dollars of revenue and then reinvest that in lobbying and regulatory capture and all that, same way Google is doing it. That is scary, right? We need a counterbalance to that. We need a checks and balance. We need companies like X to succeed just to prevent woke AI to proliferate. That's the real concern, but that's beyond the scope of this episode. So to summarize, from an investment perspective, we think that X is falling behind against Anthropic and Codex is expected. It's not great, but it's also not too worrisome because we are in the real world. We are dealing with real world AI, and they are not competing on that front. Long run, we will overtake them also because the problems and the solutions and the goals that we're pursuing will be a lot more real world driven, where Tesla's FSD expertise and the Grok training, which is adjacent to that, with all the reasoning and the digital Optimus idea, will prevail because we're building a whole infrastructure here, a fully integrated infrastructure from the silicon all the way to the power and the applications and the robots, and nobody else is doing that. Thank you.